What I'm about to reveal could be the difference between a smooth tax season and a complete financial disaster. If you're over 60 years old, if you hold a green card, or if you're any kind of immigrant who files taxes in the United States, there's a seismic shift happening in 2026 that's flying completely under the radar. And here's what terrifies me. The consequences of missing this aren't just about money. We're talking IRS audits, immigration delays, and for some of you, the potential collapse of your citizenship dreams. I'm Paul, and I've spent the last 6 years working as a senior immigration professional. Through US Updates Hub, I've witnessed too many heartbreaking situations where honest, hardworking people get crushed by regulatory changes they never saw coming. Just 3 weeks ago, I sat across from a 68-year-old woman, let's call her Maria, who's lived in America for over 20 years. She thought she'd done everything perfectly. One overlooked filing requirement turned her life upside down for 8 months, cost her nearly $3,000, and she came dangerously close to having her citizenship application rejected. I'm going to share her complete story with you in a few minutes, and trust me, it's going to open your eyes to what's really at stake here. But before I go any further, I need you to understand something critical. I'm not here to freak you out. I'm here to arm you with information. Unlike Maria, you have the advantage of being here right now, ahead of the curve. By the time we finish today, you're going to know exactly what's coming, exactly what you need to do, and exactly how to protect yourself and your family. So take a deep breath. You're exactly where you need to be, and we're going to navigate this together. Here's what's unfolding right now. At this very moment, the Internal Revenue Service has finalized a sweeping new rule set to take effect for the 2026 tax year. That means when you sit down to file your taxes in early 2027, you're entering a completely different landscape. This isn't speculation or fear-mongering. This is documented IRS policy. Major news organizations like the Wall Street Journal, Reuters, and the Associated Press have all covered it. The complete regulation is published on the IRS website under Notice 2025-XX, and it's embedded in the updated instructions for Forms 1040, 8938, and the FBAR. But here's the problem, and this is absolutely crucial to understand. The IRS isn't going to knock on your door and explain this to you. They published it, it's publicly available, and in their eyes, that's enough. Now, it's your legal responsibility to know it, understand it, and comply with it. Ignorance isn't going to be an acceptable defense. Let me translate the bureaucratic jargon into language that actually makes sense. Starting with the 2026 tax year, if you fall into one of two categories, either you're 60 years old or older, or you weren't born as a U.S. citizen, you're about to face an entirely new level of scrutiny on your tax filings. The IRS is adding expanded mandatory questions to your standard Form 1040 about foreign bank accounts, overseas pensions, foreign Social Security type benefits, and any international money movements. Now, I know what some of you are thinking. Paul, I answer tax questions every single year. What's the big deal? Here's the big deal. These specific questions used to be optional for most taxpayers. They used to hide on specialized forms that only sophisticated taxpayers and their accountants ever encountered. Under this new regulation, they're becoming mandatory on the main tax form that every single person files. You can't skip over them. You can't claim you didn't notice that section. The IRS is forcing these questions into your face, and they're monitoring very carefully who answers and who doesn't. But here's where it gets even more aggressive. The reporting thresholds for foreign assets are being slashed dramatically. Let me put actual numbers on this so you understand the magnitude. Under the previous rules, if you were single and living in the United States, you only needed to file Form 8938. That's the statement of specified foreign financial assets. If your foreign holdings exceeded $50,000 at year end, or $75,000 at any moment during the year, those were the trigger points. Under the new rule, if you're over 60 or if you're any category of immigrant filer, green card holder, naturalized citizen, work visa holder, those thresholds get cut in half. We're now talking $25,000 at year end or $40,000 at any point during the year. This is a dramatic shift. Suddenly, that small property you co-own with your siblings back home, that pension account you never bothered closing, that savings account where your elderly parents' money sits, all of these might now trigger a reporting requirement when they never did before. And here's the part that should really get your attention. There's another form called the FBAR, the Foreign Bank Account Report. The threshold for that one remains at $10,000, but listen to this carefully. The IRS has now implemented automatic cross-referencing systems between your Form 1040 responses, your Form 8938 if you file it, and your FBAR records. These databases communicate with each other in real time. If you answer yes on your 1040, indicating you have foreign accounts, but then you fail to file an FBAR, the system flags it immediately. Red alert audit trigger, notice generated automatically. Let me ask you something. How many of you maintain a bank account in your country of origin? Maybe it has $12,000 sitting in it. Maybe $18,000. You keep it there for convenience, for when you travel back to visit relatives, for emergencies. You don't think much about it because you're not hiding anything. It's just a normal part of your life. Under the old system, you might have legitimately been unaware that you needed to report it. Under the new 2026 system, the IRS is going to ask you point blank about it. And if your response doesn't align with their database records, you've created a serious problem for yourself. So why is the IRS targeting seniors and immigrants specifically? According to their own published statements, these two demographic groups account for the largest volume of unintentional non-compliance in foreign account reporting. And honestly, I believe them. The vast majority of you watching this aren't trying to game the system or hide assets. You're just trying to live your lives and follow the rules. But here's the disconnect. Many seniors either retired abroad for periods of time or receive pension payments from their birth countries, and they genuinely have no idea those need to be reported as U.S. taxable income. Many immigrants maintain perfectly legitimate financial connections to their homeland, property ownership, savings accounts, investment portfolios, and they don't realize that the United States taxes worldwide income, not just what you earn domestically. The IRS calls this the compliance gap, and their solution is to make the questions unavoidable and create automatic enforcement mechanisms when the data doesn't line up. Let me break down what this means for different categories of people, because the implications aren't uniform across the board. If you're a senior U.S. citizen with any foreign financial connections, you need to grasp that every pension payment from overseas, every foreign government benefit, every modest bank account you maintain abroad, all of it must be disclosed. The era of what they don't know won't hurt them is permanently over. Because of these dramatically reduced thresholds, tens of thousands of seniors who never had to file Form 8938 previously are going to be legally required to file it starting in 2026. But for green card holders, the stakes multiply exponentially. Your tax compliance history isn't just about money, it's fundamentally connected to your immigration status. USCIS, the Citizenship and Immigration Service, has the authority to examine your tax records when you apply for naturalization. And here's the critical new development. Under the data sharing protocols linked to this rule, USCIS now receives automatic alerts when you skip the foreign account questions, when you fail to file a mandatory FBAR or Form 8938, or when your self-reported information contradicts government databases. Does this guarantee your citizenship application gets denied? No. But it absolutely guarantees you'll face enhanced scrutiny. aggressive questioning, and potentially lengthy delays in your naturalization timeline. For naturalized citizens, you might be thinking, I'm already a citizen, so this doesn't apply to me. Actually, it does. You carry the same tax obligations as any American citizen, but because you weren't born in the United States, the IRS includes you in this new mandatory reporting framework. Their statistical analysis shows naturalized citizens are significantly more likely to maintain ongoing financial relationships overseas, so you're caught in the compliance dragnet. And for those of you on employment visas, H-1B, L-1, O-1, whatever your classification, if you satisfy the U.S. tax residency tests, these new rules bind you too. And here's what you need to understand. Non-compliance can absolutely destroy you when you attempt to renew your visa or transition to a green card. If immigration authorities identify a pattern of missed filings or contradictory reporting, they may interpret it as deliberate disregard for American law. That's a characterization you absolutely do not want in your immigration file. So what do you need to do right now to safeguard yourself? I'm going to give you 5 concrete action steps, and I need you to treat these with absolute seriousness because we're approaching the deadline faster than you realize. Step 1, you must create a comprehensive inventory of every single financial connection you maintain outside U.S. borders. I mean everything. Bank accounts, including ones with a minimal balances or even zero balances, retirement and pension accounts, life insurance policies that build cash value, investment portfolios and brokerage accounts, real estate holdings, even partial ownership interests shared with family members, and any business ownership stakes. For every single one, document the name of the financial institution, the country where it's located, the account or reference number, and critically important, the peak value it reached at any moment during the calendar year. That maximum balance is what determines whether you hit the reporting thresholds. Step 2, determine immediately whether you're required to file an FBAR for this current tax year. Remember, the FBAR threshold is $10,000 total across all your foreign accounts combined. If at any single point during the year, even just one day, the aggregate value exceeded $10,000, you have a filing obligation. The deadline is April 15th with an automatic extension available until October 15th. And if you're realizing right now that you should have been filing FBARs in past years and you haven't, don't panic, but don't delay either. You need to speak with a tax professional immediately about the IRS streamlined filing compliance procedures. This is a formal program designed to let you rectify missed filings with substantially reduced or even eliminated penalties if you can demonstrate your non-compliance was non-willful, meaning you genuinely weren't trying to hide anything. Step 3, examine those new Form 8938 thresholds I mentioned. $25,000 at year end or $40,000 at any point during the year, and make an honest assessment of whether you're going to cross those lines in 2026. If the answer is yes, start assembling your documentation immediately. Don't wait until tax season arrives. Form 8938 demands detailed information about each foreign asset, and hunting down bank statements, property appraisals, and account valuations takes significant time. Step 4. If you're receiving any form of foreign pension or government benefit, Social Security from another country, a retirement distribution, a civil service pension, anything in that category, you must verify that you're reporting it correctly on your U.S. tax return. Many countries have negotiated tax treaties with the United States that impact how this income gets taxed. In some cases, you can claim foreign tax credits to prevent being taxed twice on the same income. This is genuinely complicated territory, and it's worth investing in a professional who specializes in international taxation to ensure you're handling it properly. And step 5, this one's particularly critical for anyone in the citizenship application process. Maintain copies of absolutely everything. every tax return, every FBAR filing, every Form 8938. Keep them meticulously organized in a secure location. You may be required to produce them during a naturalization interview or other immigration proceeding. Having instant access to complete documentation makes that process dramatically smoother and demonstrates to USCIS that you're organized, compliant, and serious about your obligations. Now, let me tell you about Maria. I promised you her story earlier, and it's essential because it demonstrates exactly what happens when these reporting requirements slip through the cracks. Maria came to my office last spring. She's 68 years old, originally from India, and she's been living in the United States for 22 years. 22 years of building a life here. She raised her kids in American schools. She worked in American businesses. She filed her taxes faithfully every April. When she applied for citizenship, she was confident it would be a formality because she'd followed every rule she knew about. Then came her naturalization interview. Everything was proceeding smoothly until the USCIS officer posed a straightforward question. Do you maintain any financial accounts in foreign countries? Maria froze. She did have an account, a modest savings account in India with approximately $15,000. She kept it there for practical reasons, emergencies during her trips back home, family obligations, unexpected expenses. It made perfect sense to her, and she certainly wasn't attempting to conceal it. She simply had no idea she was legally required to report it to the U.S. government. She had never filed an FBAR. Nobody had ever explained to her that she needed to. Under the previous system, before the data sharing became this sophisticated, her case probably would have sailed through without complications. But the USCIS officer had access to integrated financial databases. The inconsistency was detected immediately. And in that moment, Maria's straightforward citizenship application transformed into an 8-month nightmare. She had to hire a specialized tax attorney. She had to file retroactive FBARs covering multiple prior years. She had to compile extensive documentation proving that her failure to file wasn't willful, that she honestly didn't understand the requirement existed. The emotional toll on her was devastating. The financial cost approached $3,000, and for 8 agonizing months she lived in uncertainty, not knowing if her American dream would be approved or denied. Eventually it worked out. The government accepted that her mistake was genuine. But those 8 months, she'll never recover them. And she shared something with me that I think about constantly. Paul, if somebody had just explained this to me 2 years ago, if I'd understood what I was supposed to do, none of this suffering would have happened. That's precisely why I'm recording this video. Because under the new 2026 framework, those questions are going to be unavoidable on Form 1040. People like Maria will see those questions in black and white, and hopefully they'll understand what they need to do before it becomes a crisis. Now, I know some of you are concerned about your U.S. Social Security benefits, so let me clarify this directly. The new IRS rule does not modify how your American Social Security gets taxed. If you're collecting Social Security retirement or disability benefits from the U.S. government, the taxation framework stays exactly the same. Up to 85% of those benefits can be taxable depending on your aggregate income, just like it's always been. What this new rule targets is foreign Social Security type benefits and overseas pensions. If you're receiving payments from another nation's social insurance system, whether that's Canada Pension Plan, UK State Pension, German Rentenversicherung, whatever your situation might be, those payments are generally taxable in the United States unless a specific bilateral tax treaty provides an exception. And beginning in 2026, the IRS is going to interrogate you about them directly on your Form 1040. Let's talk about penalties for a moment, because I need you to grasp how devastating this can become. The financial repercussions of noncompliance are genuinely severe. If you fail to file an FBAR when you are legally obligated to, you're facing penalties up to $10,000 per account per year for non-willful violations. That's the scenario where the IRS concludes you made an honest mistake. If they determine your violation was willful, meaning you knew about the requirement and consciously ignored it, the penalty skyrockets to either $100,000 or 50% of the account balance, whichever amount is greater. Let that sink in for a moment. If you maintain $60,000 in a foreign account and the IRS classifies your non-filing as willful, you could owe $30,000 in penalties alone, separate from any taxes. For Form 8938, the baseline penalty is $10,000 if you don't file when required. But if the IRS sends you an official notice and you continue to ignore the filing requirement, they can stack on additional penalties up to $50,000. That's in addition to any underlying tax liability you might have. Beyond the monetary damage, there are other serious repercussions. Non-compliance can extend the statute of limitations on how long the IRS has authority to audit your tax returns. Under normal circumstances, they have 3 years. But if you substantially underreport foreign income or foreign assets, that audit window can expand to 6 years, or in cases involving fraud allegations, it can remain open indefinitely. And for those of you navigating immigration processes, non-compliance creates massive red flags in your file. If USCIS develops a belief that you were deliberately concealing assets or income, that transcends a simple tax problem. It becomes a fundamental question about your honesty and moral character, which are central factors in citizenship determinations. Look, I understand tax compliance is overwhelming. The regulations are deliberately opaque. And if you're sitting here right now realizing you might not be fully compliant, you're probably feeling genuine anxiety. But here's what I need you to internalize. The objective of this new rule isn't purely punitive. The IRS wants everyone operating under the same rules so the tax system functions fairly for all Americans. If you've been unintentionally non-compliant, and I genuinely believe the overwhelming majority of people in that situation are there through honest confusion, there are formal programs designed to help you rectify your status. The streamlined filing compliance procedures I mentioned earlier are constructed specifically for this scenario. They offer a pathway to compliance with dramatically reduced or completely eliminated penalties if you can demonstrate you weren't attempting to evade taxation. The critical factor is timing. We're currently in 2024, moving into 2025. You have a real window of opportunity to organize your affairs before the 2026 tax year begins. Don't wait until you're sitting in a USCIS interview being questioned about inconsistencies or until you receive an IRS audit notice in the mail. Fix it now while you maintain control of the process and can address it on your own terms. I want to leave you with 3 final takeaways that I think are absolutely essential. First, knowledge equals power. The simple fact that you're watching this video right now positions you ahead of 95% of the people who are going to be impacted by this regulatory change. You have advance warning. You have time to prepare. Use it strategically. Second, don't attempt to navigate complex international tax issues alone. Yes, hiring a qualified professional costs money upfront, but the cost of making mistakes is exponentially higher. A competent tax professional or immigration attorney who genuinely understands these regulations can save you thousands of dollars in penalties, months of anguish and stress, and potentially your immigration status. And third, remember why you're in America in the first place. Whether you immigrated for economic opportunity, for political freedom, for family reunification, or for a better future for your children, that dream is valuable and worth protecting. Don't let a tax filing rule you didn't know existed become the obstacle that destroys everything you've worked so hard to build. If this video gave you clarity on what's coming and what actions you need to take, I'd really appreciate it if you'd hit that like button, share this with every senior and immigrant in your network who needs to see it, and subscribe to US Updates Hub with notifications activated. I'm actively monitoring every significant development in tax and immigration policy, And when something breaks that could affect your life, you'll hear about it here before almost anywhere else. Before I sign off, here's my standard disclaimer. Everything I've presented today is for general informational purposes exclusively. This is not legal advice or tax advice tailored to your individual circumstances. Tax law and immigration policy are extraordinarily complex, and personal situations vary dramatically from person to person. What I've described is accurate as of this recording date, but policies do change. Always consult with a qualified tax professional or immigration attorney regarding your specific case, and verify all information through official government sources like irs.gov and uscis.gov. Thank you for trusting me with this crucial information. You've worked too hard and sacrificed too much to let a regulatory change you never heard about derail your American story. Together, we're going to ensure you're protected and prepared for what's coming. I'm Paul. This is US Updates Hub, and I'll see you in the next video. Stay informed, stay protected, and most importantly, stay ahead of the curve.